Morning, everybody. Sorry about earlier. I got the timing mixed up. I had it said it was 11 a.m. EST, but I had my clock set. I think it was 11 PST going in here. For the meeting here, I set everybody to mute upon entry, but you can unmute yourself to ask any kind of questions there. Just that way we don't get any feedback when people join. Also going to be recording this session for later. I'll record and pin the video as well. So what I wanted to do for this session, so last session we went over kind of the golden zone setup, what we're looking for, like using the BT cloud flip with the golden zone on the 5 minute to get a momentum entry. What I wanted to go through here is kind of how we can time those entries so we're getting in on the momentum and not putting like let's say a limit fill and just having price just blow past us going up 200% and we never fill on that limit. So that's what I wanted to go through here, especially in these kind of this downtrend we have. There are opportunities we can take for like those matching lows reversals, but we have to time our entries better. We can't take the breakout because if we take the breakout here, let's say we take the breakout, we have very little room to the upside. So when we're looking at like the long entry here, every time when I take a position, I ask myself, where's the stop going to be and what's kind of the risk to reward? Like we want something like this if we take an entry off like a pin bar from the lows compared to taking that breakout where we ask ourselves, where's our stop going to be? The stop's always going to be at that support. So we just want to make sure we're getting a nice entry with a tighter stop is what we want. So that way we have a lower probability of getting stopped out on a trade. Like those breakouts, let's say we're targeting that previous resistance, but we're taking an entry on the breakout. Really, the stop should always be down here at the support. So now we have kind of negative risk to reward here, unless we have like a better target above. So here I'm going to go through, we can go through like a 5 minute structure, how we would look for a trade for that kind of momentum scalp to the upside to the previous resistance, getting in before that kind of breakout entry we look for on the BT Cloud flip, which you can see here, like when we take a 5 minute BT Cloud flip for an entry, but like the way the market with where VIX is at, the volatility, like the downside pressure in the market from the tariffs, these BT Cloud entries on the 5 are not really valid at all here. Even on the downside, it moves quick and then it moves back up. So we want to fine tune our entry just in this current market conditions to give us better opportunity for upside. So the first thing I probably do here, let's pretend like we're going to trade this chart here. Like we're not looking probably in the morning, everything is too high. So what I would do just starting out, let's say this range just got put in, like we're here, here's our open, and here's our like 10, 50, 11, that wave completed. So what I would do first is kind of just mark those two kind of levels on the chart. Like those are our kind of like opening range from that wave until you get a break of anything in there. There's a high chance we just consolidate in here. So when I'm looking for an entry here, when we see this low here for a reversal, we always talk about looking for one of those pin bar sweeps of lows. So like you kind of see that here, this 5 minute pin bar here. That's what we're looking for entry. So if we're able to get an entry on that pin bar here, like while the pin bar is going up, we have room up to that kind of previous resistance here, and then our stop is just at the bottom of the wick. So it's really nice kind of risk to reward here. Like sometimes this setup will fail and go down below you, but like this, you would take this just risk reward alone. 5.2 is really nice here for upside, getting an entry there compared to waiting for the BT Cloud flip. Our stop's always going to be there, and then we're kind of less than 1-to-1 here for the upside. So that's why we want to time our entries now where we're taking it at one of those kind of reversal spots near support, like a pin bar sweep of lows, pushing up before the BT Cloud flip screen. So usually when we are seeing this, when we see this pin bar, I do like to come in to the 1 minute. So like here's where our pin bar was on the 5. we can look for something. So we see the 5 minute pin bar, right? So now we can come in here and take our golden zone from that low to this kind of high and look for an entry here off there. So like if we can't get in on the pin bar, we come down to the one and look for an entry off here. This is a lot better compared to the lows because once this pushes up, contracts have probably already doubled by the time they're up here if you're getting in down at this wick. But once this pulls back, they're going to drop about 50% and you can ride that continuation wave back up. So we see here where the BT cloud flips, you could just put like a line. It flipped red there, and we want to try to target that level on this like GZ. So you take the GZ and we want to target here. So sometimes like here, it didn't go up to the top, but when you zoom in and you see like this price is pushing up and then you see a big wick just push down, that usually means let's get out here. Like it might pop back up, but that's the wave kind of completed here. So if you see that wick selling pressure, so you have to watch for, or here it is as well. Like you have a wick, we're pushing up and then that wick comes in and then these candles start shrinking and it's rounding off. Once it starts rounding off here, we don't want to be in this trade any longer because it's going to push back down. Like that wave is kind of complete. But that's usually doesn't happen until we're right near that kind of previous support. So we have like a little tolerance in here. Like you see there were some buyers pushing it up. You can put in if you want to market, like that's the level, but it's not like just the exact. You just put a rectangle in where you see these buyers pushing price up before it pushed down. So there's like a supply right around this zone here is what you would look for when you're targeting that level. Like you just draw in a box, like here's our level where the BT cloud flipped, and then you just draw in a box to those kind of candles where we saw like it hover before the wave came in down. So if we're taking this kind of trade here on this GZ, our stop is here at the bottom of the wick, and we're targeting up here, which even at the bottom of that zone gives us kind of nice risk to reward to the upside. So that's what we're kind of looking for now, just in these current market conditions compared to trading that 5 minute like BT cloud flip. So if we remove everything here, we trade the 5 minute flip, we're not making any money. So that's why we have to kind of fine tune and look for those pin bars, come in on the one, do like one of those kind of GZs, and then try to take that to the previous high. So that's what we're going to be looking for going into next week. One of these, like we see our low, clear bottom here at 11 a.m. Price just channels down, like slow bleeds down. We see a wick come up. We look at the 5 minute to kind of confirm that. Once we see that wick, that candle, then we hop down into the 1 minute, which I'll mark it here as well. So like what I would do if you're trading this, you can just put like a line towards that. So we just mark the pin bar here. We know we found some buyers coming in off that pin bar. So we've swept the lows. We're pushing up. So after you mark that, come down to the one so we know where the spot is. And then we're going to look for a 1 minute GZ for an entry to the upside. So that's how we're going to look for it here, those matching lows. And we have some nice risk to reward and try to target that previous high from the 5 minute wave here. So we're up here. We put our level here, like our previous high, but then we also draw in rectangle here from those bodies of this wicks. We saw like a area of confluence, like there's matching lows here, it consolidated, so it's a good kind of supply zone. So that's how we're gonna look to trade going into next week compared to our normal structure. Let's take a 5 minute BT cloud flip to the upside. Just in our current market conditions with VIX high, we can't do those kind of 5 minute setups. So that's how we're gonna take it now. Like here, we can look at this kind of structure. What I like to do is take the chart, like zoom out and kind of shrink it down, because then you can get like just clear structure, right? We just draw some like clear lines, like that's our structure. Like what I like to look for on these like 5 minute, let's say this was our like structure here. We have these clear like three highs here hitting like the same level. So like end of the day, let's say we're around here, we tested those lows, then maybe like we look for a break. Say we're pushing up like last power hour, we're getting close to breaking this level. If a new higher high prints, we're probably going to be going to the next level up, which is right around 437. So like that's something I look for end of the day, like a 5 minute structure, a clear break, and then we can play that momentum end of the day where contracts really move. It's happened a few times last week. Probably get some this week as well going in. Like that's I like this on the breakup side better than trying to take this bottom. Risky trying to take this bottom entry because if it fails and goes down, it's gonna push fast. Like if this level doesn't hold the low here, it's probably going to drop fast. Like we could see a lot lower quickly, and those contracts will lose quick. So that's why I'm mainly look for that kind of momentum break to the upside. And usually when you're taking the breakouts to the upside, the big pop happens at the end of the trade, making it easy to get out. So you get a big pop, and then you just sell your contracts, and then it probably pushes back down. But when you're trading puts, the big pop happens right at the beginning of the trend. So 70% of the move usually happens in that first candle, and then you might get like 20 or 30% on the next two, which is the main reason I try to focus more on calls. Just with puts, like when we're trying to get in right before the momentum. If you wait for that single candle, you've probably missed over. It's already up over 50%, so it's a lot harder on downside trading those momentums moves down. So that's why I try to focus on the upside. That way it's easier to get in. We have time to get in. And then the big pop at the end, it's so obvious, it just exit right after that pop upside. One other thing I wanted to mention. So let's go back to that first setup we were talking about where we marked the low and then we see that kind of pin bar coming down here. Like if we're trying to trade like momentum on this, like I'm gonna show like what we would look for in a candle here. So ideally, like we're coming in, we see this. Which kind of candle do we want to enter on? So I'm looking here. The candles I like are like this, like these momentum candles closing at the highs. It doesn't have to like fully engulf, but like this is a strong kind of momentum candle. So like I'm looking to enter one of those kind of candles. And if it has confluence with the GZ, if we see the GZ here and you get a bullish like candle close like this, like where it fully engulfs that body, closing near the highs, we just want to kind of jump in on that candle. So this is on the 1 minute when we're coming back to entry. You see these kind of engulfing like momentum candles closing near the high after a back test, like near the lows after a pin bar sweep of the lows. So when you see that, this type of candle signals that we're going to have like a lot more momentum to push to that target. Let's say we're entering on like a candle like this, like these small body candles, big wicks, like that is not something we want to enter on it. We want it like fully engulfing if it can, just closing near the highs as well. The big thing is we want that candle closing near the highs, like a strong big body candle closing near the highs, which is going to give us at least a few minutes to push to the next level. So that's what I'll kind of be looking for. Like here, that kind of morning star reversal, you see it dip in like another one later. Like you put it here, we bounced right off the 0.618. Then that kind of, this is not as strong, but it is like a big body candle closing above this white candle before that morning star confirmation. So if you get a body closing above that candle, that's usually confirmation we're going to go higher, like from that pattern, that morning star pattern. So that's the kind of candle we're going to be looking for taking an entry. So basically, like when we get down, test these lows, we're looking for that pin bar, a GZ, and then one of these type of bullish momentum candles. I just call them the impulse candle is what I like to call them. Like an impulse candle to the upside is where we're looking to take our entry. And that we're probably just going to look to take like a market fill. Because if you're trying to chase that with limits, you might miss the fill. Like it's happened to me a few times where I see that candle, I put my limit at 15, now it's at 17. I go to reset, now it's at 19. When I could have just done a market fill, I'm probably gotten filled at 16. So that's, I think we focus on that. If we're taking one of these kind of entries where the BT Cloud flips on an impulse candle, we want to be taking that market fill just to guarantee. Like trying to do the limits, we're probably going to just get less left behind. Then it's already up 30, 40%, where the market's going to maybe fill us like 5 to 10% above ask if it's moving. Does anybody have any questions on that? Like this kind of setup here? I was talking a little fast there. Make sure, so if you have any questions, you have to unmute first. Let me see if there's a way to unmute everybody.
Hey Chris, quick question. So when you see that impulse candle to the upside, with that retest in GZ, are you waiting for that 1 minute candle to close before entering, or you just see that kind of bullish engulfing momentum happen and you enter mid candle?
Ideally, we're kind of waiting for it to close. Like, I think if you see the volume, like, you'll kind of know if it's going to close near the highs. Like, it's there. I would say we would wait for that 1 minute candle to close and then enter immediately on like the next one. That's like the confirmation. Or if we're seeing that candle come up, like just looking at premiums, like we're entering either on the impulse candle or the next one. But if you see that candle push up immediately like that, there's a high chance it's going to close near the highs when you see that. Like let's say we're going in 1 minute candle just started, like 10 seconds later, we're all the way up here. Like there's a high chance we're gonna close near the highs.
Perfect, thanks.
So with our GZ setup here, really, we always talk about we want it closing above zero point 0.5 here, like I'll close above zero point 0.5. So that kind of gives us that candle. But I think if we see that impulse candle looking like it's going to close above zero point 0.5, I think we can take our entry right on that candle there, the impulse candle. And then, so I was talking about our stops, how we had our stop at the bottom here. We can actually put, if we want to, just put our stop right at the bottom of that wick below 0.618, then it's tighter. Like I think that might work better there. If we're using our 200 hard stop, we're gonna get stopped out before we touch the bottom of that wick, but we have at least room to there, like that bottom of the 0.618, that candle there. So if we move it over here as well, like there, $200 stop, we probably have room to there.
Hey, Chris.
Even when the market's kind of like going crazy down like it was Thursday or Friday, there's a lot of good opportunity to the upside. You can even see from this chart, like there's, even though we were down 6%, like we have a lot of big waves, like wide swings, both up and down. So we'll have a lot of opportunity. Like we opened here 439. We did close at 423, but look at these waves. Like we have a huge wave from this one from 426 to 437, 10 points. Here we went from 425 to 432, almost $10 again. Even this one down here, 425, like $6. So like we're gonna get plenty of opportunities for the capitalize, even with this high volatility. We just need to wait. Like we're fine-tuning our entry now down to the 1 minute with the GZ instead of that 5 minute V2 cloud flip. Because if we saw on the five, it's not going to give you anything on the five. But if we come down, look for the pin bar, and then take that wave off the one, that GZ, like a couple of these in here, you see like perfect bounce off of 0.618, and look how much it gave to the upside, like five, six, $7. So we'll get some nice profit off these with volatility still high.
Chris, just quick follow up about the stops there. So, like in Webull, it's your stop is like the contract price, right? Versus the actual price of the equity that you're trading. How do you recommend like calculating or figuring out how to set your stop level besides just, $200? How do you set it under the candle wick knowing that it's the contract price, not the price of like QQQ or whatever?
So with Webull here, we can't actually do that. Like I know with E-Trade, a few maybe Thin Card Swim, you can do a conditional where if price crosses this level, take a stop limit like at market. But I think really like when we're in these trades,
I told you
we're holding
he
them
saw me to bed
for
the other night.
5 to 10 minutes tops. So like I'm just watching the level usually. Like even on my big account, like I'm just watching the 1 minute chart to get out like with the order up because I know I'm not going to be holding this trade long. Like once we get in 10 minutes, right? 5 to 10 minute time frame we're looking to 10, 15 minutes to get in and out. So I mainly just kind of watch it on the main account. But I think with the challenge, it's better to use those hard stops at certain numbers. Like, yeah, we'll get stopped out on a few good setups, but what happens if it goes down? Then that contract's down 50, 60%, like off a couple candles.
So, do you primarily like take your entries using the 1 minute chart when you
So
draw these
no,
lows?
normally I do like the 5 minute, like let's say we get like a market's like a new higher high printed with a BT cloud flip, but how the market's behaving now, that setup's not like good. So that's why I'm saying like we're gonna come down and use the one here. With this volatility, we can use the one. Like you get big moves. Like usually you don't have like crazy volatility like this. You just get like a smooth kind of curve, but just now, like current market conditions, we're doing this on the one, but normally it's that 5 minute
Hmm.
flip on like a break of a trend, which we'll probably get back to that once the market kind of bottoms. VIX is back at 20, but just where we're at now, we're gonna start using the one just because of the volatility. Like we wait for a 5 minute kind of candle, nice candle close. We hop in on that five. We've probably missed 60, 70% of the move where we could have jumped in on the one and gotten a nice move up. So going in here, we're still using like the BT Cloud Golden Zone kind of strategy. We're just lowering the time frame now. Instead of using it off the five, we're jumping down to the one because of the volatility to get a better entry and push that to the 5 minute wave high. Like this is crazy price action. You rarely see like 10-point swings 3 different times in price. Like this is almost like unheard of. We had it a few times during COVID, but this kind of volatility, you rarely ever see like these kind of moves. Like SPY usually moves a few bucks max. Like just going back, I remember trading 2019, we barely would get like a $2 move in SPY over a week. Like you could take SPY calls like $3 over the money for like 0.01 going into next week. But here we're getting a full like $10 move both ways twice, which is
Yeah.
pretty crazy in
Hey,
here.
Chris, could you put a fib on that first dip that you got?
So this
Yeah,
one, right? So I
yeah,
was
right
looking
there. Could
here,
we have
like
played that one?
I was looking at that, like let's say I don't think we have one on this one here. Like we hit those matching lows and really didn't get any GZ pullback off there. So that's why I didn't put anything there. Like this, maybe if we were looking to trade this, we'd put like maybe like a trend like this. And then once it breaks, retest, and starts pushing back up, maybe try to trade that. But here we didn't have that kind of GZ. But there's always going to be a GZ later. Like there's at least one per day we could take. But this first one here, we didn't really have anything come in. It just we held that kind of support 426 and it just popped up.
Yeah, cool. Yeah, I was wondering why we typically, the reasoning behind typically waiting till like lunchtime or after. It seems to work really well though, your strategy.
Yeah, especially so here, did you when we were looking at the premiums, you had to go like 600 points like over the money to find something. Like, yeah, we did move huge, like $10, but like you're paying a premium to buy early in the day. Like let's say price kind of just goes like this. If price goes like this, both sides are gonna probably get halved just because of how high the premiums are. But what I've noticed too, like when we wait later in the day, this kind of setup happens almost the same time every day. right around that like 2:30, like 2 p.m., we always get one of those kind of impulse moves right around there. And then around 3 as well. Like I've noticed like a pattern where it's been happening almost pretty much every day around the exact same kind of time we get that reversal. Any other questions on the setup or what we're looking for going into this week?
No, it's going to be a wild week, though. I know that.
Yeah, let's see. So I do have, if we're looking at like the kind of weekly 1 week, if we take where the BT Cloud flipped last and like put in like let's say our golden zone, we do have it's like 480 SPX. We dip below 0.5. That's a lot of people I think were expecting that like August 2024 low to hold, but we just pushed right through it. If you come in here, I think that level is right around 482, like 480, somewhere in that kind of range. So that would be if we do keep going down, like that would be the spot. There's another, like I would look at this, maybe this 488, like another level down. We'll see. Like I think a lot of people are expecting us to at least get like a snapback bounce, but it all really depends on Trump and the tariffs. Let's say he could easily just say 0% tariffs for everybody once if everybody agrees, and then boom, we're gonna shoot back up until we get some kind of news. I think if we do get some kind of news, like a positive catalyst coming about the tariffs, we're probably going to get a big kind of trend to the upside, maybe 1 or 2%. So we should look out this week for kind of like a news article. Like I see a financial juices posting, like we'll see it in the candles as well. Like it's just a huge bullish engulfing candle closing near the high off like a news catalyst. That's probably going to say we're going to fill at least one or two gaps to the upside if that happens. Like we saw that with Nike. Nike was getting hammered, and then news came out Vietnam, 0% tariffs. Trump said 0% back, and boom, Nike just exploded like to 58, 59 from 53. So something like that could happen on the overall market, depending on if a major country kind of agrees to the same terms.
Yeah, and I didn't hold. I didn't hold those Nike calls either.
Yeah, so the Nike, that still would have been down because of the big drop. So I did post, I have this like little article in here. I posted that, sent that out as an email, like a newsletter. What to look for like this week here going in. Like we have where the market closed, 50.74, just a few catalysts. So we have a Walmart investment meeting April 9th, like a major catalyst. Tariff drama, consumer confidence. We get a CPI print coming in on the 10th for March. And we get big bank earnings starting on Friday, the 11th here. So we do have a lot of stuff coming in. So we get that CPI print's going to be huge about inflation. That's going to tell us if we can cut rates or not. And I did see speculation Trump's doing this to force Powell to cut rates early. Like he's trying to get Powell to cut rates early. We'll see what happens after how the inflation print is. So going into tomorrow, like with VIX like this, it's probably going to be the same time. We're going to look for that like 2 p.m. trade around there. I'll be on at open to look like we'll see how the market reacts. But probably like a 99% chance of the first trade not happening till that like lunchtime, 1 or 2 p.m. Like sometimes we do get these big pops in the morning off that like 9:45, 11 a.m. Reversal is just the premiums are so much. Like I wouldn't want to use like the whole account into a single trade when we can wait till later and take like reduce costs, half the risk on like the same setup.
Yeah, I know there's calls about the golden zone thing, but do you have any strategies for shorting the VIX at all when it's this high? Because typically it doesn't stay this high for a long time, right?
Yeah, so I do think VIX like maybe short on the actual VIX like VX. I know they have like VXX is one people look at like a VIX short, but this I think it's better with like shares like VXX compared to options just because of the decay. Like even with like TQQQ and stuff like the triple X leverage stuff, like the options don't move like you think they should. So I think it's like maybe look at that like VXX, like shorting that, or like unless if they have like an inverse VIX that you could take long. That way, when VIX comes down, that inverse VIX is gonna kind of push back up. But that's what I would look for there. Like I don't like the options, just the movement, the decay. Like this comes back to 20. I don't think you're gonna be at 500. Like it's probably not even gonna be 500% from that, just cut from the decay. So the question I see in the chat about how do you determine risk to reward? So if we're coming in, let's say we take that kind of GZ setup here, like where we took it. I just do the long position and then let's say we enter kind of here, then we're like targeting that kind of previous high and then I just move where the stop would be. And that's like my risk to reward on the setup. The big thing we want to watch for is we want to make sure our stop is not too high. Like we want to make sure it's at least positive risk to reward. Like where's my stop? Where's my entry? Where's the next level? And we want a lot more runway towards that next level compared to like a 50-50 or something, or even we don't want to take it if it's negative. Okay, so explanation about VWAP. So if I'm trading this kind of setup, I like to see where VWAP is and kind of use that as like a target. Like I don't, if we're in a downtrend here, VWAP's above us, there's a high chance we're not going to get above VWAP. So I want to make sure like that VWAP, if VWAP, let's say was like here, closer, I probably wouldn't take this GZ setup. But since there was a lot of runway to VWAP, I like taking this at more confluence. Like it's a better setup when you have more room to VWAP. Because you can see here, like we didn't even get to VWAP here. We rejected down. So if VWAP was down here when we're looking for the GZ, it's not as confluent, like it's not as strong the setup just because VWAP has been like a kind of like a brick wall. Every time we hit it, we reject down. So if VWAP was a lot closer, the setup wouldn't have been as good compared to when it's up here. You have a lot more runway to it. So question for the contracts, let's say we're taking that kind of pin bar. I like to take a contract where the previous resistance was. So if we're taking an entry here, down in here, like I want to take the contracts around here where that previous resistance is, because that's where I'm usually targeting. So I want to take a contract where my price target is. That way it's over the money, but when we get close, when it goes in the money, that's like your max kind of gain. If you get that impulse move up, you're going to time it there compared to if you're too far over the money, you won't get a gain. But if you get something that's decently over the money, but then goes in the money, you're probably going to get like the best value on those contracts. But it's always the levels. Like if we're down here, I'm gonna target that 431. So if we enter down here at like 423, what level do I have upside? Just that previous resistance. So I'm gonna target like 431. If that's everything there for questions, I'm gonna upload this to YouTube, pin it to the channel, and if anybody else has any other questions, you can tag in market talk or like strategy on like what to look for a setup. If you see something, can post the chart. Can show like how we would look to take an entry on that impulse move up. I think that kind of covers everything I had to cover today, just on what we're looking for now. I wanted to go through how we're looking to take those entries here on the 1 minute with this volatility compared to our normal 5 minute setup. So if we're doing like a fib, you just do the fib draw tool. You just take the bottom of that wave and just draw it like to the top. Like that's for upside. If we want to do like a downside, we would take it from like the top of the wave here and draw it like to the bottom. Like there's one to the downside here. So you take impulse wave down, it pushed up, you mark that high, you come down to the wave low, and that kind of gives you confluence. You can watch this level. So if we're trading this upside off the sweep of the lows here, we need to watch this 0.5 from that impulse down because there's a high chance it'll reject. So we did have that kind of confluence with that rectangle we drew in right at that 0.5 to exit there.
Are they eating or nobody even opened it? I'm about to put you guys.
The reason I like calls more than puts is when we're taking our entry, the impulse move up happens right at the end of the trend. So if we're trading like these impulse moves, it gives a big pop at the end, and then we can get out. When you're trading puts, like it's most of the move happens on that first candle down. So it's if we're trying to trade a momentum and we miss that first candle, we've missed out on like 70% of the move. Reason I like trading the upside better. We have more time to get in and it's a lot easier to get out compared to puts. Let's say we took puts here. 1 minute later, it's already up 100% and you're chasing for like 20 or 30% left of the move.
Hey Chris, are your levels are your fib levels like customized in the settings? Because when I draw like a fib, I get like multiple levels. I get like way more levels than you get.
Yeah, so I do remove like all the other levels. I just show 0, 1, 0.618, and 0.5. Like you can pick anything, but those are like the core ones that I like to just show. But I do see like it's probably going to show a bunch. I did modify that because I think it shows a bunch of random colors too. So I just
Yeah,
made some modifications. Use one color, kind of grayed out. Like I don't want to see all those multicolored things on the chart.
got you.
So one thing I do look at on fibs, let's say we don't have any like resistance or support below. You can take like this structure on the 5 and like what are we looking for? Like let's say we have that low, right? And then here's our high. Like we can put fibs below for like targets, like a 1.272. I like to target below if we're looking for like a downside level where we have nothing like empty space, or like upside if we're taking an all-time high breakout. Like we don't know where we want to target next, so we can put like a fib below as like a target if this like structure breaks.
Do you use a fib level for any kind of stop loss or not really?
So like if we're doing the 5, I usually just take that wick kind of low. So if we're taking like an entry off this pin bar, it's usually at the bottom of the wick. So if we come to the 1 and we're taking like a GZ, right? Like we held that, we're taking that impulse. It's usually that 0.618, like that low. Because if that doesn't hold, we're gonna go back to lows. So that's kind of usually where I would put the stop, like right at that fib. Because if the fib doesn't hold, the trend's invalidated. If it holds, we should see continuation up.
Yeah, that makes sense. Cool, thanks.
So even with VIX high like this, I think we're gonna still be able to find some nice setups, like maybe even like bigger percentages if we're using these kind of 1 minute impulse GZs after like a sweep of lows. I think we're gonna be able to find maybe like a 200-300%er, even with VIX crazy high like this. So I do use the GZ with like other stops. I think it works better with the more liquid ones. Like we can use it with like a Tesla. We can put in like a here, but that didn't hold as well. Like maybe here we put this level pushing downside, but it's works a lot better with these high liquid like the indexes compared to like a random name. They still can work, but I think when we're trading like a momentum name, it's better to look for like a just using the structure, the market structure, and like taking like a break of structure. We break the high, we look for like the gap fill or something, like a trend break, a BT cloud flip. Works a lot better on the momentum names. Just to go through like a final review of this on the 5, like drop into the 1. So blank chart here, like we see these highs, we just finished this low, right? So what we would do is mark these levels, right? We mark the low of that wave, 11 a.m., and then mark the high up here. Now I'm coming in, I'm looking for the pin bar, right? Like a sweep of lows, pin bar back up. You could put something like this, maybe like a channel trend like that. So I see this clear channeling down. Then I see this pin bar, right? This nice pin bar sweep of lows. So now I'm going to come down to the 1 instead of trading the 5 minute flip. And when I see that 1, you don't see the pin bar here, but now that I see this, I'm going to put in a GZ from that low to the wherever the wave high goes. And then we're looking for our entry off one of these impulse candles inside the GZ. So we talked about that impulse, like strong candle closing near the highs, kind of engulfing this if it can't, the previous candle, like engulfing. Really, you just want that momentum candle up. When it closes like that, I want to take like that entry on the ask, and then I'm going to target that kind of previous high up here. So we mark the previous high at this level here, but then we're going to draw in like a zone. We're going to look at this like reaction here. We push down, magneted up, kind of consolidated. So we're going to draw like a little rectangle here. And we're going to target somewhere in here, like this kind of zone. And once we see these kind of wicks coming from above, that's when we know there's weakness. We see it rounding off. Now we want to get out once it starts rounding off. And if you tip to the 5, you see that kind of pin bar from the top signaling there was some sellers there, and then it pushes back down. So that's why we're going to be using the 1 minute, because if we're using the 5, we're going to miss out on a lot of profits. And we see this pin bar, and then this starts coming down. we might be back at break even off like a single candle down like this. If we have confluence with one of these trend breaks, it adds more strength. Like we have a steady trend down here, just keeps failing. And then once we hit that GZ, the momentum candle came in and then it just broke that trend. Like that's nice high probability setup that we're going to hit that previous high if you have confluence with like a trend break as well. And just going over VWAP, we're using VWAP as kind of like an intraday target. So if the trend is down, there's a higher chance we're going to reject VWAP. So when we're taking this entry, we want to make sure there's some like runway up to VWAP. If VWAP was down here, we might reject and keep pushing lower. So we want to make sure there's room to VWAP. Like that gives a higher probability as well that we're going to hit that previous high. So we want VWAP like above, room to that next resistance, and a tighter stop. VWAP, it's just automatically calculated here. If you add it to the indicator, like I have it session HLC3, this should be like the default VWAP for like most brokers here. Like it just auto calculates it for you.
Nossa, só liga pra falar de problema. Não liga, nunca fala. Tá tudo bem? Como é que você está? Você quer uma consulta online de graça?
That's everything I had to cover for today. If you have any other questions, post them in the market tab and I'll make sure to respond in there. I'm also going to be uploading this to YouTube so everybody can view that wasn't able to attend. Have a good one and see everybody on Monday.